tonight, like I said, I have to mention this disclaimer. So I'm not giving advice. I'm giving mainly education because what we're doing today is mainly for education purposes. It's just
Yeah.
to educate people. It's not to give advice.
Okay.
I'm not giving advice. I'm not likely to give advice on this kind of you know
Okay.
forum.
Okay.
It's just
Yeah.
to give people, just to increase their knowledge. It's mainly
Mm.
just to educate people.
Hello, 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 hello again. You are welcome to another episode on this channel. And we are going to be talking about something very important to everyone, everyone. And that is, like we say, the three basic necessities of life are food, clothing, and shelter. And today we will be talking about shelter. Long while. So today's topic is about buying a new home. So we have someone who has been in the field for a really, really long while. He will be talking to you more about himself, introducing himself to you. But shortly, I will just tell you he is a financial coach and he is very passionate about helping others financially in their financial situations or issues. So he's a mentor to many. And he is going to be here talking to us about mortgages, buying. What does it take to buy a new home? What does it take how do you start if you want to buy a new home? Because we know that there's so many people who have even bought their homes, but they have very little knowledge of what they need to do next or what's how to come out of it if they want to come out of it or what to do to progress in it. So we have a very important guest with us today. And his profile website is themoneymentor.co.uk. Themoneymentor.co.uk. So he's a very important person, and I will be introducing him he will be introducing himself to us by himself. And before we go, I would like to say thank you for always supporting the channel, for always coming in to share the videos, like, to make comments, and we're expecting your comments. Hey, we're expecting your comments. We wouldn't be doing this without your support. So I'll be bringing on the screen Mr. Ayatunde Nurain Abudu. You are welcome again. Can you please
Thank,
introduce yourself?
thank you, Bumi. Yeah, good evening, everyone. My name is Ayotunde Nuren Abudu, like Bumi has just introduced me. I'm a financial coach at the moment. I used to be a financial advisor. And what is it was that obviously being a financial advisor means you give advice on financial products like mortgages, insurance, and things like that. And I did that for quite a long time, for over 10 years. But then at some point, I was self-employed, did with so many people from different walks of life. But I worked out that there was a gap in financial knowledge about products. A lot of people I dealt with did not really understand much about financial products. And sometimes I had to turn people away because, for example, you want to take out a mortgage, people want to buy their first home, they come to me, oh, can I help them? Unfortunately, I couldn't help because there were certain things they had done or things they hadn't done in order to get to that stage. So I decided to then go take a step back. I decided not to be a financial advisor, but go more into financial education and coaching, which is helping people get to a point where they're ready to make the right financial decisions. And, so that's how I set up the company called The Money Mentor. This was, I think, about 6 years ago, and we've been going since then. So like Bumi said, I'm really passionate about, helping people. And mortgage is is a very passionate area for me because buying a home, most people will probably look to be financing their home, and the only way you could finance your home is through a mortgage. And it's the whole process. Worldwide, is kind of similar from one country to the other. I know we've got people from all over the world. I'm going to be talking mainly within the concept of the UK system. But the UK system is not very far off. Some of the things I'll be talking about is not very far from other parts of the world as well. There's quite a lot of similarities. It's just that there might be some variations, but there's a lot of similarities between anywhere else if you're looking to take a mortgage to buy a house. But we'll come to that shortly. I know that there are quite a lot of buzzwords which I've been, I was going to bring into my discussion, but I'll be mentioning that as we go along. And obviously, I'm sure people will have a lot of questions to ask me, which I'll be happy to answer sometime later on.
Yeah,
Thank
thank you. Thank you very much. Exactly. Questions, questions, questions. That's why we're doing this. We're doing this so you can get educated. We can all get educated about what we need to know when it comes to buying a new home. It might be a new home you're buying. It might be you're even extending your estate or whatever it is you're doing with homes. He is the right person to talk to us, to educate all of us about it. So, um, Mr. Abudu, what does it take to buy a home? Do you need to be a resident? Do you need to have a visa? Do you need to be, can a student buy a home? Do you need to be financially buoyant to do one? And
you.
we have so many buzzwords which we will be talking
Okay.
about. But first question is, what is the first step in buying a home?
Okay. Thank you, Wumi. Well, the first step in buying a home really is there are quite a lot of things around your status, as you rightly asked. So I would think there are a lot of things around, as an individual, you know, for example, if you're, it's more about starting with affordability. It's more around that. Apart from your status, fine, there's immigration status as well, because in the UK, you obviously have to have at least what we call a tier two. So if you're not a UK citizen, you need to have what we call a tier two, minimum of a tier two visa in order to buy a property in the UK. But in order for you to get a mortgage. But anybody can buy a property in the UK. Anybody can come from anywhere in the world to buy a property. You pay cash. But if you're looking to take out a mortgage, then there's some certain things that need to be in place. And this is where
Mm,
things about tier two visa. Now, the other things that need to come into place, I would say, is around three things personally. I think it's around affordability. I'll just mention those three things and then I'll come back to them. So, one is affordability. One is about having a deposit, because if you're buying a house, you have to put down a deposit. If you're taking out a mortgage, you obviously have to
mm,
take out a deposit. You won't get 100% mortgage. The lender will not give you 100%. So you have to put something down, and the lender will have
mm,
to put, they will finance the rest of it. So that's how it works. So that's one thing. And the other thing is around affordability. Affordability means around what you can afford. That is the most important part. What you can afford in buying the house. So if they're going to give you a loan, they will need to know how you can afford, and then what we call affordability checks that will need to be carried out in order for the bank to check whether you're able to afford the loan or not. The
okay.
other thing, the third thing I'm going to mention is around your suitability.
Mm,
Suitability is around what we call credit, your credit scoring. You know
yeah.
how your credit status. How your credit status is. Whether you've got good credit, whether you have bad credit. I guess here in the UK, and I'm sure in most parts of the world, this thing is automated. So we all have like what a credit profile. Where as you spend money, as you manage your finances and all, there's a system which records all that. And this is the thing the lenders will look into. They will look at your financial history, how you've managed
Mm,
money in the past, you know, whether you were good at managing money, whether you were bad, and that will have an impact on whether you'll be able to access the mortgage or not. So those three things. So like I said, going back to what I've just said, the first thing is around I've mentioned the immigration status separately. But apart
mm,
from that, like I said, you've got the three things. You've got having a deposit,
mm,
your affordability, and then the third one is your credit status. So I'll pick on each one individually. Is that
okay.
all? I'll just go in depth into each point.
Yeah,
So
okay. Thank
so
you.
but okay, sorry. Before I go there, let me just say something in general. Now, in buying your first home or buying a house in general, you don't necessarily have. There's different ways you can buy a house. Obviously, one is you're paying cash, and the other one is you're buying with a mortgage. And there are different ways you can do that. So we're talking mainly tonight about using a mortgage, but
Yeah.
obviously you can buy cash as well. If you have the
Mm,
cash, if you can afford it, you buy the house outright. That's what we call buying with the cash. So anyone can come from anywhere in the world and buy a property in the UK. The only thing that will happen in that case is that when you're buying a house, you've got the process, solicitors, and all the people who will be, drawing up the contracts. One of the things they will need to check is the source of your funds. Where did that money come from?
mm,
things about money laundering. They want to make sure that you know the money is come from clean source. You know what I mean? Clean
Yeah.
source. That so that is it. But anybody can buy a house from that. Now the
Oh.
mortgage rate is what we're now. I'm going to go into fully about the mortgage rate now. Um, with mortgages, there are different ways as well. Before I go into the 3 points I mentioned earlier on, there are three ways or some ways mortgages work. So, for example, for somebody who's buying a house for the first time, there are various options to them. One option is to get a mortgage where you just put down a deposit and then the lender will give you the rest. So, for example, you could put down 10% of the value of the house you're buying. So let's say you find a property you want to buy. The property is £200,000. So you can put down 10% and the lender will give you, which is 20,000, and the lender will give you 180,000. So but then that's the mortgage. So the lender will give you a mortgage for 180. You put down 20. You put down 20%, which is sorry, you put down 10%, which is 20k. So the lender gives you 180k. You put down 20k. That's one option. Another option is what we call shared ownership. Shared ownership is more like a part buy, part rent. So, and the reason why you have this kind of product is because places like London or most places, house prices are really high.
Mm.
So people are unable to afford to do what I've just said. So because both of the, I'll come to that shortly. So because of that, you have the option of buying part of your property. So for example, what I said earlier on. So the example I gave you, like a property for 200,000 is to be sold. So
Mm.
ideally, you will put down 10%, which is 20k, and then the lender will give you 180k. But for you to be able to get a 180k mortgage, you have to be able to afford it. So I'm going to touch on that shortly. So, but you might not be able to afford 180k. So one option that might be, for example, is you have what we call shared ownership, where so the property is 200,000. So rather for you to get a mortgage to cover the whole amount, part of the amount, and you put down a deposit, what will happen is you could actually buy a share of the property. So part of the property will be rented, the other part will be what you will take out on the mortgage. So let me give you an example. So you might have like a 50% share in the property, which means a property which is £100,000, and sorry, £200,000, you will have a 50% share of that, which is 100k, and then the 100k of the rest you will pay rent on it. So what would then happen is you have to get a mortgage for maybe like the earlier example I gave, you probably have to get a mortgage for out of the £100,000, which is 50%. You have to get a mortgage for you have to get 90 or 95% of the value of that 100,000. So, for example, you will probably get a mortgage for 95,000, and you will put down 5%, which is £5,000, and then that means the 100. So you only get 100%, which is 50% share of the property. The other part you pay rent on. So how it works in practical terms is this. So what could happen is you might be paying maybe, let's give just a rough example. You're paying maybe £1,000 a month. So out of that £1,000, you'll probably be paying a mortgage. Your mortgage will probably be maybe 400 or £400, and then you're paying rent on the remaining. And that is just be able for you to be able to afford it. So I know it's very detailed, so we can always talk about it in detail in a future session,
Yeah.
but I just want to touch on it briefly. I know people will have a lot of questions about that. They want me to explain it a bit further, but I just thought I should touch on that briefly. so
Mm.
so so like I said, I've mentioned one option is to take out a mortgage and then you put down a deposit. The other one is
Mm.
the part buy, part rent. The third model is what is going around, which people have been tapping into. It's called help to buy. So help to buy is tailored towards people who are buying their first property for the first time. And how it works is mainly because of affordability. I'm still going to come back to that affordability shortly. So
Mm.
where houses prices are quite high in places like London, people might not be able to afford to be able to buy. So what the government has now done really is but mainly on new developments. So this help to buy is only to do with new properties, brand new properties. So with developers, they have this kind of scheme with developers where they finance developers And what would then happen is you find a new home you want to buy, which is part of the scheme. Let's say, let me use some practical figures. Let's say you find the property for £200,000. So in London, you can get up to 40. So you could get a loan. There's two parts of the loan. The government will give you what we call an equity loan. So they will give you 40% of that 200,000, which is 80,000 as an equity loan. You would then have to put down 5% of it as well, which is 5% of 200,000, which is, I believe, 10,000. And then the remaining, you have to take out a normal mortgage on. So what you have is that so it's three parts. So one part is the normal mortgage lender, which is 55%. So for a property of 200,000, you take out a mortgage for 110,000. The government has an equity loan. Equity will come to why it's called an equity loan, which is 40%. So the government will then have 40% of 200,000 is 80,000. Okay, so the government will have an equity loan of 80%. The lender would give you a mortgage for 110, and then you put down the balance, which is £10,000, which is 5% of 200,000. The reason why you have that is you might not be able to afford, the first example I gave you, you might not be able to afford to take out a mortgage for 180,000, or where the normal lender will give you 180,000 and you put down 10%, which is 20,000. You might not be able to afford that. So because you can't afford it due to your affordability, that's when you will do that. So that is why we have that. So there are three different schemes. Now, I'm happy to go into that in detail on each scheme at a later time. But I thought I would just touch on that, for everyone's benefit.
Yes.
So to go further, and so going back to what I mentioned at the beginning. So I've started to talking about mortgages. I've talked about the three different ways you have buying like a mortgage. You just have one lender, and then you put down a deposit. I've given an example where you have part buy, part rent, and then the third option is what we call the help to buy. Now, and I mentioned things around affordability, and this is why I want to go into that. So
Yeah.
you start to understand why you might fall into any of those three categories.
Mm.
So affordability. So most times when you go for a mortgage, it's based on your income. It's based on your income, how much you can afford. So different lenders have different ways of looking at lending, but I'll just give you a rough idea. It's just rough idea. On average, you'll be looking around 4.5 times your income. So let's say you find a property you want to buy. In order to get the mortgage, looking at how much deposit you have to put down, for the mortgage you require, you'll be looking around 4.5 times income on average. It might be more than that. Some of them might give you slightly a bit more than that. Or based on the kind of profession you are into. For example, people who are like doctors, solicitors, or some other professionals might get a bit more money based on their jobs. But generally, I would say roughly is around 4.5 times income. So that is what. So that means that, given the example I gave earlier on, if you found a property you were buying for £200,000, and you were looking, so it means for £200,000, and you have to put down a deposit, like I said. So they say you have to put down 10%, which means 10% of 200,000 is 20,000. Means you have to get a mortgage for 180,000. So it means for you to be able to get a mortgage for 180,000, if you do the figures, it means you have to be earning at least £40,000. So in order to get a mortgage for 180,000, you have to be earning £40,000, because 40 times 4.5 gives you 180,000. And then you then have to put down 20% and 10%, which is 20K. So that is the outright say. So you can understand. So if you don't earn 40,000, it means you can't get an outright mortgage for 180,000. What are the options available for you? You either then look at your income, you multiply it by 4.5, say, okay, this is what I can afford, and then you have to find a property which is lower in price. But as you know, depending on where you live in the UK or any part of the world, house prices are quite high. and you might not be able to afford it. So that's why you then have to look at those other options I mentioned, like help, shared ownership. Because rather than for you, for the example I've just given you, rather for you to be getting a mortgage for 180,000, it could be that your mortgage you can only get a mortgage for 190,000. Sorry, for 90,000. So that means you could go for shared ownership, which means you own just 50% of the property, and then you then have to pay. The scheme is normally run by housing associations. So what will happen is you'll be paying rent to a housing association or a social housing landlord for 50% of that, and then you would then own 50%. And then what then happens is in the future you can actually increase your share, because you can go in by owning 50%, and as your circumstances improve, maybe you start earning more money, you can do what we call staircasing, which means you can increase your share. So you can go from owning 50% to 75% of the property. But I have to mention that in the future, it depends on what the price, as you know, house prices will keep going up. So for example, let's say you had a shared ownership property where you're owing 50% of it, which is 90,000. Yeah. So it means the 90,000 is your own share of that property. Now the property you were buying it, so don't let's from that example, the property was you actually own 90,000 of that, of the 180,000. But what then happened in the future is that the property that was 180,000 or 200,000 then increase in value. It goes up to 250. So it means in the future, if you are trying to buy 50%, you're not going to be buying 50% of you're going to be buying 50% of whatever the future value is, because the price has gone up in value. So that's how the shared ownership scheme works. I know it's a lot, there's a lot around that, and I can go into that because I can talk on that subject. That on its own is a subject on its own. Each of the examples I've given you are subjects on their own. So, but I just thought to mention that. So if you don't go for that option, then that might lead you to the third option, which is the help to buy. And the help to buy is mainly for first time buy. So it's around affordability. So affordability, they will look at, how much income you earn, how much you spend on bills. You pay bills, you've got council tax, you pay your utilities, you pay. So they will look at all that. And also if you have any borrowings, like if you owe anything. So if you owe, I know most people have credit cards, they have loans, all that will be factored into how much they'll be able to borrow you. So that is what they're looking at for the ability. They're looking at your, your profile, how much money, how much you have at your disposal. So let's say you're earning a certain amount monthly. Out of that, how much money do you spend on bills? How much money do you spend on transport? How much do you spend on paying if you have loans and credit card? And that would affect how much money they'll be able to lend, which how much you'll be able to borrow from the lender. And that's around affordability. And that is important. The other bit is deposit. So depending on how high the price of the property is, that will determine how much deposit you have to put down. So like the example I was giving you, you find a property for 200K. It means if you're going to be doing for the normal mortgage, you'll be looking to put down at least 10%. So it means you have to put down 20,000. So for you have to look at, do I have 20,000? Have I have 20,000 pounds saved? So you put down 20,000 and you want to get a mortgage for 180,000. So it depends on how much deposit you have. That will kind of determine how much you'll be going for. The more money you can put down, the better your chances. So that I have to mention. Now the third part I was mentioned is around your credit status. So I know people who live in London, other parts of the world know about credit status, credit ratings. You have good or bad credit ratings. Obviously, if you have bad credit ratings, that might impact on you being able to get a mortgage. Because if it means like maybe you've missed payments, so how do you have bad status? Where you have your mobile phone. You didn't pay your bill on time. That will factor in. There's something being recorded in your against you have a tick against your name that you don't manage things like mobile phones. Maybe your utility bill, you did not pay your gas bill or your phone bill on time. That will get recorded against you. Maybe you have a car loan or something, you didn't pay the car loan on time. that will. So because what the lender is, they're looking at your history. That's what they call it, credit history. They're looking at your history. How have you managed money in the past? And that's how they call it, credit history. So that will determine whether the lender will give you a loan or not. Now, obviously, there's a whole process of that. Credit scoring, if you have a good credit score, a high credit score, it means you've been managing your money very well. You pay your bills on time. You don't default. You always pay things on time. You don't miss payments. It means you have a good credit history. When you have a good credit history, it means what that does as well is that it means you can get a good you could get a good mortgage product. And there are loads of lenders that will be happy to give you lend you money. But if you have poor credit history, then that might have an impact on which lender will be willing to lend you money. And sometimes you might not be able to get the mortgage. Sometimes you might be able to get it. But if you do get that mortgage, what you pay as interest might be higher based on based on that. So loosely, I've been able to go into the three different factors. The fourth factor I mentioned earlier at the very start was around your immigration status. Regarding that, you have to have at least a tier two status in order to get a mortgage. Different lenders have different criteria. So for that, and then from there on, I like to summarize, so because I've been talking for a bit, so people can at least know what I've been talking about. So I talked about the immigration status, and then I mentioned things about the three different factors. I mentioned having what deposit you have, savings you have to put down as deposit. I mentioned around your affordability, what you can afford, and I gave a loose example around payment, your what you earn, your salary, 4.5 times your income, and stuff like that.
Yes. I just want to ask a few questions. Thank you very much. You've
Yeah,
you've given us a bird eye view of the topic.
yeah,
Thank you very much for doing that. Um, Now I've heard people say to build a good credit score,
yeah.
you need to, you definitely need to have either a bank loan, or you need to have credit cards. And some people are not comfortable with credit cards. Some people are not comfortable with getting overdrafts and all of that. So how do people build a good credit score
Okay, thank you.
apart from you paying all your bills and all of
Yeah,
that? And
yeah. Thanks for that question. Well, the credit score is just credit history. Now, credit history doesn't necessarily mean you have to go, especially for a first-time buyer, you have to go for overdrafts or loans just to build your credit score. Not necessarily, but there are other things you can take, like your mobile phone. It's a credit score. It's a it's you have a credit agreement. So if you have a mobile phone, there's a
mm,
credit agreement for your mobile phone. How you pay your mobile phone, you know, having a loan is only part of it. You don't necessarily have to take out a loan to have your credit history, because there are other ways you can show your credit history. Things like having a mobile phone. Most people have mobile phones. They have phone contracts. You have a contract, whether it's a mobile phone contract, whether it's a utility bill contract, what kind of contract? Yeah, that is it. Credit cards. You might not. The other thing is this: the idea about credit is not about really owing money. It's
mm,
more like how you are able to pay back whatever you take out. So, for example, some people might do is they might take out a credit card, they spend and they pay it back at the end of each month. So
mm,
it's showing that you can manage money well. You know, some people have a car loan. Most people have car loans. A lot of people have car loans. So that is a credit history. You can build your credit history from that.
okay.
Like I said earlier on, having a phone bill, but not having any kind of history. So not borrowing any money at all. So you don't have a mobile phone. You don't have a utility contract. You don't have anything. The lenders are not able to kind of verify you
Trust.
in terms of how you're able to manage money. All they
Mm,
need to know is how you manage money. That's it.
mm,
That is it. So you don't necessarily have to go out and start owing money, taking out overdrafts and stuff like that. You
yeah.
don't necessarily have to do that. At the basic level, just tend to have contracts, like your phone contract, the normal contracts that you have. Make sure you're paying things every month, when you should pay. And there's so many things you can take out, where you have to pay back. So as long
Mm,
as you're doing that, you're building up your credit history,
yeah.
and that's what most lenders have to.
Yeah.
That's the starting point. Like I said, you don't necessarily have to start going and splash and start owing loads of money. So what people might do is that have a credit card, they spend in the shop, and at the end of before they pay it back, they spend,
Mm.
they pay it back, they spend, they pay it back. And it's that way it shows that you'll be able to take
Yeah.
money and pay it back.
Yeah. Okay, great. Thank you. Thank you very much. So, one other question. I've got two questions actually.
Mm.
One is you said you need to have 4.5 times your income
Yeah.
to if you're going the route of having a mortgage with a deposit. Now, is it going to be just one partner? Is it going to be joint partnership?
Okay.
I mean, with your partner, with your husband or wife, or
Yeah.
can they do
Combined
they
income.
consider marriage?
Yes.
If they're
Yeah.
living
It's
together or
combined
just two
income.
friends coming together, can they
Yeah.
do that?
Yeah.
Things like that.
Yeah, it is. You're right. It's combined income. Thanks for asking
Oh,
that
okay.
question. The 4.5 times income is just a guide,
Hmm.
but it's individual. That's just a guide, but it's based on one individual. Combined, so I'm just giving you a guide because it all changes from lender to lender, from company, from bank to bank. But sometimes you might have like joint income. Joint income might not have to be 4.5. It might be 4 times joint income. So if you have two people coming together,
Yeah.
multiplied by 4, that is
Okay.
joint income. So, but different lenders have different things, and they have all their ways of working their affordabilities. But for
Mm.
me, it's just a rough guide.
Yeah.
It's just a rough guide. Yeah, yeah. So combined income could be 4 times. Some lenders might even have less than that. Some will have a
Mm.
little bit more than that. It depends. The lenders all have their different ways, but that gives you just a guide in terms of what you're looking at. And
Mm.
not only that, it's not just about your income. They will look at, or they'll bring in other factors as well. Like, if you've been in a job, so it helps sometimes. Like if you're self, so and then there's the other. There's so many things around this thing. There's
Mm.
whether you're employed, whether you're self-employed. How long you've been in your job. Are you a temporary contract? Are you a contractor? Are
Mm.
you a temporary worker? There's so many other factors that come into it, which I haven't even mentioned as well. But that is part of it as well.
Yeah.
So it's a minefield.
It's a
But
lot. Mm.
yeah, but
True.
yeah, I'm happy. So where people come with questions, it's easier because in my mind, it's very hard to pick on every single part of the mortgage process. But it
Yeah.
helps when people ask questions because then I can then talk a bit
Yeah.
more on those things. Yeah.
Yeah. Thank you. So, viewers, you're hearing him. Write questions, just type it down there and he will deal with all of your questions. Here you are, free of charge, a golden opportunity for anyone who's got questions to ask. All right. So the final question I have is, where do you find the prices of houses?
Houses. Yeah.
A rough idea.
Okay.
I know there's some like Rightmove, Zoopla, but
Yeah.
as an advisor, do you have other channels
Okay.
of
Okay.
search?
Yeah. So right move is the most common one in terms of, if you're looking for properties, you've showed it on the screen. So if you want to have an idea, so wherever you live, you tap in. It's very easy with right move, isn't it? You just put in wherever you live or wherever you're looking to buy. You just put the address, you put the town there, you pick things like, you just put a house price or so based on what you think, put some price in, put the number of rooms you're looking at, put the kind of property you want, and then you can then have an idea. There's Zoopla as well. With Zoopla, there's something within Zoopla that tells you what prices are what in certain areas. So you have the main ones are Zoopla and Rightmove, where people advertise their properties on. So that is the main ones. And then locally, you've got your local agent. So, where you live, you have agents who are on the high street. You can walk into any of the agents. You could look around because they always have property advertised on their boards. So you can always look at that, and then that gives you an idea what prices are and what you might be able to afford in the area in which you look. But like I said, Rightmove and Zoopla are the most common ones, and the online ones, it's good. They're quite good, and I will recommend those. You know for so really tonight, like I said, I have to mention this a disclaimer. So I'm not giving advice. I'm giving mainly education because what we're doing today is mainly for education purposes. It's just
Yeah.
to educate people. It's not to give advice. I'm,
Okay.
I'm not I'm not giving advice. I'm not licensed to give advice on this kind of
Okay.
forum.
Okay.
It's just
Yeah.
to give people, just to increase their knowledge. It's mainly
Mm.
just to educate people. And the
Okay.
idea is this: what we do with coaching is that we help people, we educate people, we give them all the, let them know have the knowledge in order to make the right decision. So
Yeah.
what will happen is, what I do with the coaching is you give people a lot of information, that they ask you a lot of questions, you give them that, and then they sit down. And once they're ready to go forward, that's when you then sit in front of a mortgage broker or a
Mm.
mortgage advisor, because the mortgage advisor will then give you advice in terms of this is the job I used to do. That's the job I stopped doing to become a
Mm.
financial coach. So the mortgage advisor will then look at the best product. They will then look at the lenders. They will look at various ways in terms of what is your best option in terms of getting a mortgage, and what suits you best. And they're regulated by the Financial Conduct Authority.
Yes, thank you very much. Exactly. We're all being educated here
Mm.
just to have information. Information is power. When we have the information in our hands, we're able to go the right direction, make the right choices. So yeah, thank you very much. If you've got any questions, please send them on the screen, tap them out, and it will be treated in the next topic. So this is part one of how to buy your home, buying a new home. What do you need to do? So send your questions, and Mr. Abdu will be ready to answer them. Thank you very much. Are there any last words you want to tell us before we go
Before we
tonight?
wrap up,
Is can people buy a land, or do they have to actually buy a
the
building
house,
in the UK?
you can
Do
actually
people
buy
buy
land.
lands?
That's a good
Oh,
question for me. Yes, you can actually buy land. Yes, you
wow.
can do what we call a self-build. So what will happen is you will buy the land, and you can get there's finance to buy the land and to build, and it's called self-build. So what those are called self-build mortgages. So there's self-build mortgage where you take out the land, and there's a lot of value in that. I know it's not some people do, but it's very good. Why it's good is this: when you buy the land, and when you're buying a house from scratch, as you build, the value increases. So there's a
Okay.
premium in buying land, because when what will happen is, but from the moment you start building to the moment you complete the build, there's an uplift. And that's
Mm.
why. But it's just that, as you know, in the UK where we live, land is scarce.
Mm.
Land is scarce. There's not a lot. And like, that's why most people will buy from developers, because with land, there's land somewhere else, they build estates. So if you work within your town where you live, if you're working within the city, you're not likely to find spare land next to you.
Mm.
Like in places like Africa and other places, or parts of
Yeah.
the world, you see
Mhm.
free land across the road and anywhere. But in cities or in the Western world, it's very hard to come across land in the in the town center, because yeah, there are parts of land. There's always
Mm.
land. People do buy and build on. It's not a common thing, but it is there. It's possible. So
Okay.
it's very possible where you buy the land and then you build in stages. And then what will happen with that is that the lender gives you the money in stages to build. So you build that
Mm.
house in stages, and the lender gives you money at each stage to build. So you start by
Okay.
buying the land, and then you build at different stages. But the good thing about it is that there's a lot of value in it, because from the moment you start building to the moment the house is completed, the value rises. You know.
Mm.
So that's one good thing about self-build. It's called self-build. Yes. So thanks for
Okay.
that question.
Great, great. Thank you. So, yeah, our buzzword, as you can see on the screen, you've got so many buzzwords and so many are being added to it. And so, for the next part of this discussion, we'll be talking about freehold, leasehold. So many people are confused about that as well.
Okay.
Like some like a land, how would it be freehold? Do you still have to
Yeah.
pay? Does it mean you don't own it? And
Yeah.
and so many other questions like
Yeah.
remortgaging, renting to
Yeah.
buy, buying to let,
Yeah.
inheritance tax,
Yeah.
mortgage free, being mortgage free,
Yeah.
having to have finished
Paying off your
paying off
mortgage.
your debt.
Mm.
Some are saying, oh no, you don't have to. Some are saying, oh yeah, sure you have to. There's so many things around it. So we
Okay.
are waiting for your questions so that we can move forward
Okay.
in this. So finish up the topic without you asking questions to know what exactly you want to know
No,
about mortgages. So thank you very much, Mr. Abudu. I really appreciate your time.
you're
You've spent
welcome.
so much time with us today, and uh, we, this is golden time. Thank you
Yeah,
very, very much.
and I want to say thank to you too, Bumi, because thank you for bringing me on the show. And I think what you're doing is great. I think it's something, I'm passionate about it. I would like to see people own their own home because it's very important. It's good to
Mm,
own your own home, because even if prices are not going up, the fact that when you retire, you're not paying rent to
mm,
anyone. You actually
mm,
own your home. It's not about house prices going up. It's not about, oh, you buy because you're going to make. No, the fact that, because at some point you retire, as you
yeah.
get old, you want to be
Mm,
in your own house. You don't want to be paying rent. So it
mm,
means what you pay out is less because you own your house. You don't have to pay rent to anybody. All you pay
mm,
is just your utilities, and you have less money you have more money to live on. So that alone is something. So anything
mm,
that will encourage people, young people, middle-aged people, even older, like older, anybody can get involved. But there are
yeah.
obviously different stages and different things to consider. But I'm
Yeah.
happy to shed light in so many of the issues you've just mentioned, and thank you for bringing me on the show. And then when we go forward, we'll be addressing we'll go into in depth some of the things I've already spoken about, and some of those buzzwords we'll touch on them in our next session.
Okay. And of
Okay.
course, in the next session, we'll be asking how old can you be to start thinking of buying a home? Do you need to be, is it from when you're born? Is it from when you're an adult? Is it from when you're still in school? All of that. Don't worry, we will bring it up next time. So I won't ask now, but I've written it down so that I can ask next time. Thank you very much. I really appreciate your time. Thank
All
you.
right.
And
Thank
we'll
you.
see you next week. Thank you very much, everyone. So remember to like, share, subscribe, comment down below, and let us educate ourselves. Information is power. When we're informed, we make the right decisions. So enjoy your evening, enjoy your afternoon, enjoy your morning, enjoy your night, wherever you are around the world. And I'll see you next time. Thank you very much. Bye bye. Oh, you are welcome. Hello. Nice to see you, even though I can't see you physically, but I know you're there listening to me. And it's nice to know that God has been good to us. We're enjoying his mercies. And we are here again to listen to a very special person who was here the last time, Mr. Ayotunde Nurain. and he has Abudu, and he gave us some tips about mortgages. Like he said, he's not an advisor, he's just an educator, educating us on financial issues. So today I will bring him on the screen again. It's more about asking questions, questions and answers. So we've got a few questions people have asked, and thank you, thank you, thank you for asking those questions, because without it, hey, we won't be here doing the series. But there's some questions that need to be answered. Some people have written on in the comment of the first part, and this is the second part where you're free to ask questions now while we're talking. Later, when you listen to this video, or after so many after reviewing the first one, whatever it is. Yeah, you're welcome, Speaking Grace TV. Nice to see you here. Thank you for always being supportive. I appreciate God for your lives. Thank you very much for being here with us. It's time to ask questions about buying a home in the UK. So Mr. Abudu is here again to answer the questions, and we have a couple of questions. And I appreciate you all for coming to view, to like, to share, to comment, to subscribe. There's no better joy than being supported by friends and family and even strangers. Thank you very much. Now, without going into much detail, I will call on the screen Mr. Abdul again. You are welcome, sir.
Hello, 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 hello. Hello, Bumi. Good evening, everyone. It's nice to be back again. Yeah, I did enjoy the last session, although it's not interactive. I enjoy talking. money, money matter is my favorite topic, but yes, back here.
Yeah. And it was so good that I think that talk actually connected to you to an old secondary school friend who saw you and said, "Oh, do you know this person?" That's the
Yes,
beauty actually of doing these talks, because
yes.
you begin to say, yeah, Grace, Speaking Grace TV is saying
Well,
welcome, sir.
well,
Yeah,
yeah, welcome to Grace TV.
so you begin to see some people you've lost touch with will just see you somewhere on someone else's status and say, "Oh, I know this person. We went to the same secondary school." So it
Yes,
was nice,
yes, it
having
was.
that kind of
Yes,
interaction.
yes, it was. I'm
Yeah.
famous now. I'm becoming famous due to being on TV.
Yeah, because you're touching lives. If you're
Yeah.
touching lives, yeah, people will know you. So thank you for always being
Okay.
here to
Thank you.
um
Thank you.
give
Thank
your
you.
I don't
Thank
want to
you.
say give your advice, but give your
Yeah, yeah. I did try.
skills, share your
Thank
skills.
Thank you, Bumi. Yeah, I did try to explain because with finance is a very delicate matter. You have to be advised, you have to qualify it. I'm not here to give advice like Bumi has just explained. I'm just here to give and to educate, for people to just to educate ourselves. But it's enough that you need to act on. So that is the whole idea about what I'm doing today, based on my own experience and my knowledge. I work in the industry, but it's just purely education. If you do need financial advice, you need to be speaking to a financial advisor or a mortgage advisor who will give you specific advice based on your individual circumstances.
Okay, so we've all heard that. Thank you. We all need to speak to those who have been qualified to give advice
Yeah.
on financial matters. But
Yeah.
regarding education, yes, we are privileged to have you on a platter of gold speaking to us about mortgages. Now, the first question is, how old can you be to start thinking or making plans to buy a home?
Okay, thank you. The general guide, as you might already know, is 18. Right from age 18, you can start. To get out to take a mortgage out, you have to be 18. Now, the issue is this: minors, like somebody below 18, you can have their name as an owner on a property, but it has to be held in trust, which means like maybe your parents will be the one actually holding the property in trust. So it's your property, your name can be mentioned, but general as a guide, if you're looking to buy a house, and I'm assuming people will be looking to buy a house with a mortgage, then definitely you have to be at least 18 years.
Ah, okay. Great stuff. So, you mentioned something about being in an estate. What does that really mean to people who think, oh, actually, that means I can start thinking of my underaged child to
Yeah,
on a
okay. So it
mortgage?
means in trust is that you are, when you're in trust, it means you're holding something on behalf of someone. It's just a legal term. So it's like some people, for example, might buy something in the name of their children. Like, okay, I could buy a house in the name of my children. That's if they're buying cash or whatever. It's not, but let's say they buy a house in the name of, but that child officially own the property in their own right, but the parent is actually holding it in trust for them. So in the future, once they're of age, then there might be things about, okay, once you reach a certain age, then you can fully be in control of that asset. But sometimes what I'm saying is because some people might say, okay, I'm buying this in the name of my child, I'm buying
Mm.
the name of this child. But generally, yes, the child cannot officially own that asset single-handedly. The adult is holding that property in trust, on their behalf. Really, when somebody is held in trust, it's being held on your behalf, you know,
Yeah.
and that
Yeah.
is it.
Yeah. So that actually takes me to the way United Kingdom works, because I've heard people say, "Oh, you can't transfer your house to a child." How true is that? Can
Well,
you, and if
there's some legal. I won't
you,
go down because a lot of things is kind of legal stuff, and I have to say I'm not a legal expert,
okay,
but I do know that I've heard of people who do trust. That is an I have to go. I won't go into detail.
okay,
It's a very big area,
complex.
trust
Mm,
complex area of trust. But
okay.
yes, but sometimes people put things in trust. For example, it's people might say, okay, my child. I've seen scenarios where somebody might say, okay, my property, I'm putting in trust in the name of my child. So that parent can continue to benefit from the use of that house, but actually, technically, the house is in the name of the child, but in trust. So it's one that the child is benefiting, is a beneficiary, but technically it's in somebody else, somebody else is holding that property. But the child is going to benefit from it. So, but I don't know. I don't, like I said, I'm not a legal expert. So
Okay. Yeah.
I
Delve
rather
into
not go
that.
down the route. But
Okay.
if anybody needs to know further about that, then maybe, we could always
Consult you.
be a bit further because trust is a very big issue. But
Is
yes, people buy their own property and they leave it for their children in trust. Like for
mm,
example, they might say, okay, I'm going to give this like a gift. I'm giving this to my child, you know, and what happens is that my child will benefit from it, and in the
yeah.
future or whatever. Sometimes people do that even before they pass away because a lot of
Mm,
things around trust is mainly for people's knowledge around, after they've passed away. That I
yeah.
want to give this to my child. That when I pass away is in trust, and trust
Mm,
is another reason why people put things in trust is for tax purposes as well. Because when you
okay.
put things in trust, there's some
Yes.
tax, you can save money on tax, on inheritance tax. But sometimes you can actually give the child something even whilst you are still alive. So that's why you put things in trust. But it's a very big area, which and I won't want to give any legal advice because I'm not a legal expert in that matter.
Okay.
But
But
I'm just saying it's possible. It's possible.
yes. Okay. So if anyone is listening and you need advice, well, not advice. I always keep saying that word advice. But if you need more education on
Yeah,
this aspect of trusts and
yeah,
estates,
yeah.
please contact Mr. Ayotunde Nurain Abudu. He will point you in the right direction.
Yes.
Yes, will point you in the right direction. Thank you very much. Now, the second question is, can a couple combine their income to buy? And whose credit will be used in that case? We talked about credit rating
Yeah.
and talked about last time we said if there's a partner, husband and wife. Well, we talked about income from people who are living together who want to buy a house, maybe friends or partners, whatever it is, they can combine and buy. And someone is asking, but can a couple, like the husband and wife, combine their income to buy? And whose credits will be used in that case? If you want to throw more light on that, please.
Yeah, thanks for that question. Yeah, I actually touched on it during the last session. Yeah, actually, yes, that's true. Yeah, a couple can buy a house together and they can combine their income together, but both of their credit will be used. So, for example, if one person has a bad, so I've seen different scenarios where, depending on the credit, sometimes there've been cases depending on the lender. I guess
Mm.
people might ask that question. So normally they will look at both. If it's a couple who are buying together, the lender will look at both of them. They won't just look at, because they're both going to be on the mortgage. So they will look at them both. But there have been cases sometimes where one person might have issues with their credit, but the other person, based on them having a better credit rating, might end up, helping them with the mortgage. So the fact that one person has bad credit and the other person hasn't, and they're looking at both, doesn't deter them from taking the mortgage. But it depends on how bad the credit is from one person to the other. But generally, they will still look at both parties.
Oh, okay, great. They'll look at both parties. Thank you very
Yes.
much. Now, you are welcome to this. I'm welcoming Speaking Grace TV. You're welcome, and if anyone is listening at the moment, we really appreciate you coming on this video, on this broadcast, to listen to what we have to say. And if you've got any questions, please feel free to write it in the chat below. All right, thank you very much. Don't forget to like, subscribe, share, and do all of that with the video. It's left to you. Now, the next question: what are the procedures for buy to let? What are the
Okay.
procedures?
Buy to let, in a way, when we say the procedure, it's not that different from buy to let is not that different from buying a residential house to live in terms of the procedures. It's the same procedures. You find a property, you get you start by looking on the market, you look at the property. You have to do a more research when it's buy to let, because one, you're not going to be living in the property yourself. So what you need to know is the rent, how much rent can you get in that area, because you want to be making sure that when you do take out the mortgage, you because you're going to be making, you want to make money from the purchase. So you want to make sure that whatever your mortgage is, you get as a mortgage payment will be more. So whatever you get as your rent, there'll be enough profit compared to your to the mortgage. So it's the same process. You find the property, you go to the agent, you start looking around, go on Rightmove or whatever, Zoopla, you find the property. Once you find the property, you would then the next step will be you put in an offer for the property. So it's
Mm.
similar to what you do with the one you're buying, you're living in. You put in an offer. Once your offer is accepted, there then will be a memorandum of sale. The agents will draw that up between you and the person who's selling. At that point, you will need a solicitor, because on the memorandum of sale, they will have a solicitor. Now, before we get to the memorandum of sale, this memorandum of sale means that's the official saying we want to sell you this property. That is the official document where they say I'm selling you this property. But at that stage, sometimes before we get to the memorandum of sale, it's similar to the residential. The estate agent might want to see some evidence that you can afford the property. So
Mhm.
sometimes what they will ask is they want to see a decision in principle. That means, like that first stage when you speak to a lender, when they give you, they check all your credit, they run a credit check on you, they do all the initial checks to say, okay, we think we might be able to get a mortgage. So they give you a decision. So sometimes the agent who wants to sell you the house wants to see that you've got that. A lender has said kind of yes,
Mm.
to you, and also they want to make sure that you have a deposit. So they want to make sure you have enough funds as deposit, because you know that with buy to let, generally is that you'll be putting down 25%, and the lender will give you 75%. So they want to make sure you have the 25%, your own bit, and they want to make sure you have a decision in principle for the 75. So that is it. So once that is confirmed, the decision in principle, they've seen you've got all that, they'll drop the memorandum of sale, and then that's where the property buying process begins. And with that, the solicitor will start their own work, they carry out all their checks. So the solicitor is doing their own work, and then your mortgage company, your mortgage broker or bank will start doing their own check. They will do all the checks, do the mortgage application, they will check all the necessary things, they will arrange for the property to be valued, And once they're happy with that, if there's no issue with that, they will then issue a mortgage offer. It's similar to if you're buying a house in your own name for, as a residential property. And that will be done. Then, but what will happen, what is slightly different as well, is that don't forget is that they're not just looking at, they'll be looking at the rent as well. They want to see. So sometimes when you're buying a buy to let property, you might be buying it vacant where there's no one living there. Sometimes, because I do this, because I do buy properties on behalf of myself and others. And sometimes you buy a property with tenants in situ, which means there are tenants who are already living there. You're buying the property with the tenants in there. So that one, there will be some checks. They want to make sure that the tenants who are there, they have the tenancy agreement, they're paying their rent on time, they've got all the necessary paperwork in relation to that tenancy, because you're going to be taking over the tenancy. Because sometimes what's happened lately with buy-to-let is this. So a lot of landlords, because of COVID, I find it hard to, they want to sell their house, but it's very hard for them to get the tenant. So what they want to do is they might want to evict the tenant first and then sell the house. But because of COVID and the process of going to court and everything, a lot of those landlords are selling the properties with the tenants in situ, which means the tenants are living there. So you effectively will take over the tenant. It becomes your own tenant. You might either then drop a new tenancy. So all those checks will be carried out by both the lender. They will check, they will ask a lot of questions they want from you. They want to make sure all the things are in place. The solicitor will also check with the seller's solicitor to make sure that is in place. So what everything goes through, you exchange contracts, and then that is it. So it's not far off from buying as a residential property in terms of buy to let. The process is similar.
Okay, great, great. So the process is similar. Yeah, it's just you do more checks, more
Yeah,
checks even
exactly.
on. Yeah,
Exactly.
thank you very much. So I hope that question has been answered to your satisfaction. Thank you very much, His Word, for coming on the show. Thank you. He's
Welcome.
speaking grace. Thank you very much for being here to support. May the Lord support you on all sides too, in the name of Jesus. Now we are going into the fourth question, and that is, would you go for a new build or old? Why does it take a while for the value of new build to increase? That's a two-in-one question. If you could please answer that.
Okay, I don't know, that's a very interesting question. Very, very interesting. There's a loaded question. Okay, I'll tell you. Okay. So I think it's a matter of preference. I have to be honest with you. Whether you're buying a new build or old, it's a matter of preference. Personally, I have to be honest, I've never bought a new build property before. Although there's a part of me that I think maybe my next purchase might be a new build. But I've never bought a new build. I haven't got anything against new build, to be fair. It's just that I've never bought one before. So all the houses I've ever bought, either to live in or for investment, have always been old properties. So it depends on you. Some people like to buy a property brand new where nobody's ever lived in there. Some people prefer old. Some people have this idea that, oh, those old properties are solid. They're more that the new build properties nowadays they're built, they're not as solid or strong as the new as the old ones. People have different ideas. Some people also like, but some people like the feel of new houses, that new feel, and a lot of them are more energy efficient. So it depends. It's all relative. It depends. I don't have a preference for new build or personally for old build, but it depends. Now, let me I have a feeling where that question is coming from, because at the back of my mind, most people who are first-time buyers nowadays who are looking to buy will probably be accessing things like Help to Buy. And most of this Help to Buy is new build. As you know, Help to Buy is new build properties. And that's what most first-time buyers will be looking at because of affordability. So for that reason, if that is what is available to you because of your income or for any reason, then you might have to go for a new build property. That's it. But if you can afford an old property as well, there's nothing wrong in doing that. I believe people have different ideas, but like I said, it's personal preferences. Now, that question about why does it take a while, that too is not always necessarily true. I have to be honest with you. Because the general idea is that it takes a while for a new build to go, but that's not true. It depends on the area, depends on the kind of property, it depends on so many factors. And at that point in time, there have been some areas where actually old properties are even more valuable than new build. It depends on what side of town. There have been areas where, for example, if there is, and I think it's mainly due to demand and supply.
For
Mm.
example, if you have an area where there's so many new builds, they've just gone and built a lot of new build properties, you know, then you never know. The price might not rise as much as the old build because you don't know the preferences.
Mm.
Also, but having said that, there's what we call a new build premium. So in general, when you're buying a new build, there's always a premium attached. So the idea is that there's a premium, which means new build tends to be more expensive than old build because of this premium. One, that premium is around the idea that the person, somebody's prepared to pay more for a house that nobody has ever lived in before.
Mm.
Because you're buying a house, scrap, brand new. So
Like
that
this
is the idea. So,
chassis.
yeah, cha-cha, so brand new. So, so people like that. So there's a premium attached to that. You're buying a house no one has ever lived in. And
Mm.
that is the point. Also,
Mm.
some of these new developments are more energy efficient because you can see they're warmer. That is the general thing I feel. New houses are warmer than old properties and stuff like that. But
Mm.
then also the other reason why new build might also cost more is because of land. Land is one of the sole determining factor in terms of how the cost of a property. Because, for example, what is going to take you to build a house in one part of London is not different from what will take you to build a house in another part of London. What will make the price, I'm just using London as an example, what will make the price differ is or even Manchester or whatever, well, it's because of the price of land.
Mm.
And land obviously is more expensive. In the UK, land is scarce.
Mm.
In the UK, we have issues around brown belt, green belt. Like there's land where you can't build on. We're an island. Because we are an island, there's limited space. And because
Mm.
there's limited, and within that limited space, there are places you can't build on. You can't build on green line, on green belt. Green belt is places that the government, for vegetation, for greenery or whatever. So you can't build on that. Brown sites are the ones maybe you can build on. So there's a limit in terms of what you can build on. And for the environment and for different reasons, and also planning restrictions, the council might limit who can build where and when and stuff. So because of that, it means new builds end up being more expensive sometimes because
Mm.
there are fewer properties to build. But with the
Yes.
help to buy, that might change things because there's a lot of help to buy developments springing up left, right, and center. So,
Okay.
so all I'm trying to say is that if you are going to buy, don't the new. There's not necessary to that the new big takes a time to increase. It depends. It depends on the area, and
Mm.
sometimes there've been places where you know new bid has actually gone up quickly in price. I also want to touch on one thing as well. One advantage of new build is this. I don't know if people know that. You've heard the term off plan. When you're buying a property
Mm.
off plan,
Okay.
have you heard that? Off plan is, before a property is built. So, for example, when they started constructing, like they started to construct, when they started to construct a property, they're laying the foundation, they're
Yes.
building. You then express an interest.
Mm.
Because at that point, the value, let's say at that point, the property before as they are building, there's a value. You're buying it for a certain price. I
Mm.
bet you by the time that house it might take another 2 years or whatever before the property is built. Maybe it's a large development. By the time that large development has been finished built, the property the value is actually more higher than the. So for let me give you an example. So when you were buying that house, when it was being built, maybe you bought it for maybe 200K. You paid you purchased it for 200K. So the idea is that by the time they finish building, you're going to buy it for 200K. But one
Mm.
thing I have to tell you is that by the time the property is actually bought, so is actually finished
Yeah.
building, that house might be worth 220.
Okay.
So most times, so sometimes that's why some people this used to be in the past, this used to be a big thing. Actually,
Mm.
people used to do that a lot. People will go and pay for property once it's being built, but they
Mm.
have no intention
To
of
live
going.
there.
They're just waiting for it to once it's finished built, they will then sell
Appreciate.
off the profit.
Mm.
So,
Mm.
so, so there's so many things involved, in new
Okay.
build development. So, like I'm trying to explain is that it doesn't necessarily matter that value of new build will take a while to increase. It
Okay.
depends on the circumstances, and there's
Okay.
different scenarios. It depends on where part of the country. It depends on what is going on there. It depends on the time of the market. It depends where the market is. It depends on what kind of scheme. It depends on different factors. But
True.
so it's on a case by case basis. That is my view on that.
Okay. Thank you very much for throwing more light on that. There's a question from his word. It says, what checks should someone do to make sure that a new build is well built apart from what is on the paper? So apart from the paperwork, what other checks would you need to put in place to make sure that actually what they say is on paper is actually what it's what you see is what you get, or what's on paper is what you get.
Hmm. Well, that's a very difficult one because obviously I'm not a building expert, but I can only tell you from my own experience of, like I said, I've never bought a new build before.
Hmm.
I won't lie to you, but new build tend to come with a guarantee. They always come with a guarantee. So you have like and it used to be the NHBC. I'm not sure if that's still the one. That's the National Housing Building Federal, thing. So there used to be a guarantee. So when you buy a new build property, it comes with an insurance. It comes with a guarantee that this house is built up to. Because that's the main thing I would say to you. If you're buying a new build, make sure that it comes with, I'm not sure what they're called now. It's because it used to be NHBC. I don't know, maybe it's changed, but that's kind of guarantee. So
Okay.
each government comes with some kind of guarantee that the house has been built to a certain standard, and that's you have to make sure it's got that. That it comes with that guarantee, and just think what guarantee does it come with in terms of then also and that is like, and also with that thing that there's, because it comes with that guarantee, there's like an insurance that is attached to it, like an insurance certificate that says that within the next 10 years that house is insured under that. So sometimes if in the first year certain things are wrong with the house, the the, the, the developer has to put it right. I think there's what we call a defect period, defect NHBC, yeah. So this is it. Yeah, build mark. That's what it's called. So yeah, thanks for sharing that, Bumi. So you need to make sure that a property that is being built fresh has this guarantee. Once it has this guarantee, to a large extent, you are covered. Because what it means is that if anything goes wrong with that property, you are insured. That I know. And that's the only bit I can advise on. In terms of other things, legally, you expect that when you're buying a new property, you have your solicitors who are there to protect you. They're doing all the necessary checks. The surveyors, the solicitors, they are doing all the work on your behalf. And they need to they're there to make sure that everything is in order. But in addition to that, the NHBC is what you have to make sure is, you've got that for that property. So it
Okay.
comes with a 10-year warranty.
Great. Thank you. Thank you very much. Just looking at our time, we were half an hour into the program. Thank you very much for all those who are watching, for those who have commented, who have sent messages. I really appreciate that. Yes, his word says, okay, great. So he's appreciating what you've said. Um, Thank you, Speaking Grace. Thank you, his word, for making comments on the chat. Now, next question is the government's 40% of help to buy subtracted from the property price when banks are calculating loan, or is that an afterthought? I think the person asking this question knows what he's saying. And does
Okay.
that question make
Okay,
sense?
I think I understand what the person is trying to ask. So what the person wants to know is the 40% of help to buy sorry from the property price? Yes. So what it means is that if you're buying a property, um, let's use some figures. Let's say the property is 200K. You get the loan, the help to buy loan for 40% of that. So 40% of 200K is how much? I think it's 80. So 80. So what will happen is, so the help to buy will be 80 grand. You would then have to let me work out those figures. So how okay. So that's if the house, so what it means that if the house is 200,000, the help to buy 40% help to buy will be 80,000, which is 40% of 200K. The 5% you have to put down will be 10,000, and then you have to get a mortgage for 110,000, which is 55% of the value. So yes, the question is yes. So yes, so what will happen is they will take out your deposit, they will take out the help to buy loan, and then whatever is left is then what you get from the bank as a mortgage. so which is 55% of the value of the purchase price, or 55% of the purchase price. I don't know
Okay.
if yeah.
Okay. 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 Thank you.
I
Thank
think, I
you.
think it's what said thank you. So I believe, maybe I answered that question.
Yeah. Actually, that was the last
The previous question, okay,
personal ask.
sorry.
Yes, for the
Yeah,
last
but
one.
I understand. Yeah, so that was what the question, person who asked that question, I believe I've answered it. Yeah, about
Mm.
40%. Yeah, so yeah, so the 40%, yes, is deducted, and then whatever is left, and then they will also deduct your own deposit 5%, and then
Mm.
whatever is left is what you would then have to get as loan from the bank.
Mm. Okay.
Yeah,
Okay.
so
Great. Thank you.
that's the answer. Yeah.
Now, the final question, if we don't have any other question coming from the audience, is freehold or leasehold when considering London? What would you educate us on?
How will I educate? Yeah, I know you were going to use the word
I'm always
advice.
trying to avoid that word advice so that we don't get
I'm
into trouble here.
expecting it. But yeah, but it's true because we use that word so often.
Yes.
Yeah. Okay, I like that question. It's a loaded question. I'll tell you why. Because, okay, let me tell you, I'll tell you my own preference.
Okay.
Or in general, as a rule, freehold is always best in any case. Because I don't know, maybe I might want to educate people about freehold because we assume
Exactly.
everybody
Because
knows what
some will be like,
freehold or
what's all
leasehold.
that? What's free? What's
People,
lease? What's
we need to educate people what freehold or
yes.
leasehold means.
Yes.
Now, freehold means you own the land as well as the property. You own the land as well as the the building on it. But with leasehold, you don't actually own the land. You only have a lease on the property. So, for example, most times, but as a guard, most times lease. So with the lease, you are a leasee. You have somebody who's the leaseor, and that leaseor is the freeholder. But what happens is this. So let's say you buy a flat, for example. A flat, if you were to buy a flat in a block of flats, what it means that somebody will be the freeholder. Somebody owns the land on which that property has been built. You own the flat, but somebody actually owns the land. The person who owns the land is the freeholder. You are a leaseholder. So you would then be, so it means the person who owns that land on what the property has been built has leased the land, leased the land to you to build on. So that's when they say you have a lease, or maybe it's 125 years, it's 999 years, and stuff like that. And then you have to be paying what we call ground rent to that person every year. And in some cases, if it's a block of flats and they've got work doing in the place, then you might have to be paying them service charge as well. So that's the difference between freehold. So as a guide, in most, not all the times, but in most times, what is freehold is always tends to be, a house, like a house, and leasehold is that. But there are times where a house could also be a leasehold. Depends on what part. It's very rare, but some parts of the world, of the country, yes, that is possible. So yeah. Now the question on whether
Yeah, I'm with you.
okay, the question on whether freehold or leasehold, as a guide, based on what I've just explained, you think it's a no-brainer that you prefer to have a freehold because that means you own the land. You don't have to pay service charge. You don't have to pay ground rent to anybody. You actually own the house and you own the land, and you can do whatever you like. But if you're a leaseholder, you have to get permission from the freeholder if you have live in a flat. So it's always, so I guess it's best to be a freeholder than be a leaseholder. Now, London, it doesn't matter. What would make you take out a lease in London is because of the price of the property. Because of house prices in London are quite high. Affordability is the guide. When I did the last session, I was talking about a lot about affordability. It's what you can afford. You might end up being in a position that you can actually just afford a flat or a leasehold, which most time will be a flat, that you can't afford a house. So that's why you might want to go for a lease or a leaseholder or a leasehold rather than go for a freehold. Because ideally you want to buy a house. But because you're not in that position, you end up having to thank Boom, because that's explaining everything that I've just said. So you might not be in a position to be able to afford a freehold. So that's why you end up going for a leasehold. But ideally, it will always be best to go for a freehold. But affordability will also play a part in that. what I would say at this point is this: when there is a freehold, a lease, it's always ideal. It's nice to own your own house because I believe it's better. I'm not giving advice. I'm just saying what my preference is. I think it's better for someone to own their house than to rent. I guess that is the general feeling. So if in the end you rather be a leaseholder than be someone who's renting a property. So if leasehold is the best, is the only option for you to get on the property ladder, you must start off by being a leaseholder and then go from there, from buying your own, being then buying your own house. So some people might go from, because some people start from owning a flat
Mm.
and then being a leaseholder, and then later on in the future, once they've earned enough money or they're in a better position, they can end up owning a house. So that's what I'm trying to say is that it depends. Ideally, you want to be a freeholder, but you might end up having to be taking out a leasehold because you might not be able to afford, because already owning a house is much expensive than owning a flat.
Mm.
But having said that, it's still better. Owning a flat is still better than renting, you know. And so that is it. So affordability is what plays the part. Also, just to add something on top of what I've just said, sometimes you might also be, you might also have a share of a freehold. What that means is that, let's say you have a block of flats. It means you are part freeholder as well. You are a leasehold, but you also own part of the freehold as well. Which means that, in the one of the examples I was giving, I said maybe one person owns the freehold, but there are cases where you all together. There've been cases where I'll give an example. I have a property I bought on behalf of a friend recently where there was a block of two flats. It was just two flats in the block. So what the person who owned the but my friend was buying the top flat. The person who owned the property had the lower flat, and he was selling the top flat. So he sold it with his share of freehold, which means my friend now jointly owns the freehold with the person who owns. So they both own the freehold together. It means he won't have to pay service charge to that person. It means they both own the freehold. They split everything. The other thing about leasehold and freehold is this, which I didn't mention. When you have a leasehold, it means that the freeholder is responsible for certain things. That's why there's service charge, because the freeholder is responsible for insuring the building. It's also in charge of doing major repairs to the building. So if there's anything with the roof of the building or anything like that in the building itself, it's down to the freeholder to pay for that. And that's why you pay service charge. So the service charge you pay to the freeholder is then used to carry out repairs on the building. That's what happens. But if you have a share of a freehold, it means you and the other party are jointly responsible, for everything. So that is it. So I won't go into much detail than that, but so that is it in a nutshell.
Okay. There's a final question here, but before I say that, I will just this is on a lighter note now.
Yeah.
Could there be a situation where someone said, "Come and carry your house away from my land. I want my land back. I want my thing back. Don't
No,
carry this thing, come out."
no,
Could
it
there be
can't happen. This is a country. This is a country with laws. So, but for me, you've caught on a very good point, though, because what happens is, when you have a lease for a certain number of years. This is what I think also need to tell you. I won't scare people.
Mhm.
If you have a lease, what will happen is, if that lease comes to an end, because that's another question people might want to ask. So, what if I have a lease for 100 years? After the end of 100, what happens?
Mhm.
So, what happens is that when you own a lease, part of the lease means you can extend the lease. There will be something saying you're allowed to extend the lease. Which
Mm.
means you're allowed to extend the lease. Sorry, I just need my.
Oh,
Actually,
charger.
I thought my laptop was plugged in, but it's not actually plugged in.
Okay.
Sorry, just
That's
1 minute,
all right.
because I don't want to go offline. I want to go
That's
offline
fine.
while I'm talking to you. Okay, it's fine.
Okay.
So yeah, so what happens is that, let's say you have a lease for 60 years.
Mm.
Obviously, when the 60 years, that's if you are still alive. When that 60 years comes to an end, if you don't extend it, so you are allowed to extend. There's something in the contract that says you can extend. You can keep extending, extending, extending. But each time you extend, you have to pay a lot of money to the freeholder to extend. So that is what happens with leasehold. Now, if you don't extend and the
Mm.
whole thing comes to the end, your property goes to that person.
Really?
Yeah.
Whoa.
The whole building goes to the owner of the land.
Hi. Okay.
It means your flat, you don't own your flat anymore. It goes, the person who owns the land owns your flat.
Okay, okay. Assuming you have like 10 flats up there and maybe 5 people have paid, 5 people haven't paid. What happens?
Haven't
I
paid
think
in what sense?
I mean haven't well paid the leasehold. The leasehold expires and there are about 10 flats in the
That means
building.
you don't own, you've paid, whoever has paid, they still own their flat. The person
Oh,
who,
okay.
that freeholder will own their own, the
Oh,
ones
will
who
own
have to
their
pay.
own property.
Yes.
Oh, okay, okay.
Because because no, you're right. I get what you said. Any even individual people have their own lease. You don't have a lease together. You all have your
Okay.
individual lease.
Okay.
You all
Okay.
have your individual leases. So if you have 10 flats, it means each flat have their own lease.
All
It
right.
means that, and that means there's more money for the person who owns the freehold because each
Mm,
time the people want to extend, they have to pay money, and each of them are paying service charges individually. So
yeah,
you will deal with them separately,
separately.
individually. So what
Mm,
will happen is if flat A doesn't extend the lease and the lease runs to an end, the freeholder ends starts he owns flat A. He
mm.
ends up going flat A. In fact, there are people who actually go around buying all this. They buy freehold. They go around buying freehold to land. It's a business on its own. People who
Oh,
actually buy freehold because sometimes people might just invest. I'll just get the freehold of that block of 10 flats. If you
mm,
go on auction websites, you see they're selling freehold. They're not
mm.
selling the land, they're not selling the property, they're actually selling the
Okay.
freehold to that land.
Okay.
So
Mm.
people actually invest in it because you can get income from that.
Yeah.
You have to pay you ground rent, you have to pay service charge, and if they want to extend their lease, they'll have to pay you to extend their lease.
Wow. Wow. That's thank you. That's another way. That's another thing to look at.
Yeah. That's
All right.
another business investment for you.
Another business. Finally, because of our time, his word is asking, what of a situation where you buy a land in an estate? Will that be in between? And is that good in terms of you owning the land? I'm trying to
I need
understand
to
the
understand that. Would
question.
that be in between? That is the in between I don't understand.
Okay. Maybe he'll put more clarification on that. What
You
of a
can let
situation
us
where
know
you
what we
buy a
mean.
land in an estate? I think maybe it's something we've just touched on. I know I kind of digress when I asked that question. Well, we're talking of freehold
Okay,
and
freehold.
leasehold.
Okay, if you buy
Freehold
land,
and
okay.
leasehold.
No, it's separate. So if you buy land in on an estate, okay, I get what you mean. So if you buy land, it depends on the terms of if in an estate. Yes, I don't think this is the thing. It depends because sometimes you might buy land on an estate, but you're actually a freeholder. You actually own the freehold to that land in that estate, but you
Okay.
might have to pay service charge as you might have to pay service because that's the difference. I guess that's where his word is going. I guess because you might buy land in an estate, but it doesn't
Mm,
mean you don't have. You might still have the freehold to your property in that estate. It's just that as living on that estate, as having land on that estate, you might have to be paying service charge. For example, it's similar to back home. Like if you're on an estate, for cleaning, for gardening, for certain things, you might have to pay service charge, you know. But also, though, I want to qualify it as well. Sometimes there's some lands in an estate that might not be a freehold. It could be
mm,
leasehold as well. There have been cases like that. I remember there was a story years ago that when people up north, mainly up north, a lot of those developers, when they were building, this is what they did, which was not very good. When they were selling houses to people, they were not selling those houses to people as they were selling houses on estates to people as leasehold houses.
mm,
So you were buying a house but that house you don't own the freehold. You're leasehold. So it means you have to be paying service charge and ground rent. And it was a lot of those developers, some new developments were built like that. And those who were charging people quite a lot of money. you know. So that
mm.
is so I would say when you're buying anything in this country, that's what the solicitors are there for. They
Okay.
need to check everything out properly. But
Mm,
in general, if you're buying a land on an estate, I will assume you'll be buying it as a freehold, you know.
mm.
And it's good owning that land. It's always good owning land anyway. Land,
Okay.
but it depends on where you want to buy the land. But yeah, owning a land on an estate, yeah, definitely you're likely to be a freeholder. But you have
Mm.
to check because you don't want to, because you have to care. That's what the solicitor is there to check, to make sure that the land you're being sold, you have freehold title to that land, not leasehold title, because it's also possible for you to be sold land in an estate and where you're just a leaseholder, not a freeholder.
Oh, okay. So thank you very much. Thank you very much. I can see a sister here, Sister Gladys
Good,
Onoive. You are welcome.
good
His
evening.
word, you are welcome. Speaking Grace TV, you are welcome. You are welcome. And those who are watching who haven't written in the comments, you are welcome as well. Just remember to like, share, comment, and subscribe to the channel. Share with someone. Someone needs this information. I tell you, they might not be available here now, but if you can share the link to them, with them, they will be able to, share with other people who would need to know, because information is power. Um, s- his word says, sorry for not asking the question correctly. And yes, that is okay. That was his question. So yeah,
Yes,
thank you very much, his word.
yes.
Now, finally, I just want to, if you've got comments, please, if you've got questions, if you're here, please write in the comment section. We have about 12 more minutes to leave the broadcast. Now, my final question, well, I said a final question before, but
Well, feel
final.
free. As far as possible, within the 12 minutes, I can ask you a lot of final questions.
Yeah, we always say finally and finally and finally again. Okay. So actually, some people might have the opportunity. Maybe they're
You're
cancelled.
welcome, his word. Sorry, I'm
Yeah.
just saying welcome to him.
Okay. Yeah. There could be some people who have the right to buy. Maybe
Yeah,
they've lived in their council flat for
yeah,
years and they've got a
yeah,
right to buy.
yeah.
What would you educate them? I don't want to say advise them
Wow.
now. What would you
I like
educate them to do?
that. That's a very good question, Bumi. I actually had years ago, I did that. I was once one of those people with right to buy, and I took advantage of it. And it's where I started my property journey from. So definitely, I will always recommend. Now, the only challenge for right to buy at the moment is the value. I'll give an example. Let me give you a very easy scenario, but it depends on what part of the country. If it's in London, London is a big, big issue in the next. I've seen some cases where people, with right to buy in London, you get a very big discount. So
Hmm.
it means, the council, you have this property, the council wants to sell the property to you under right to buy. You have up to 100 and something, I think it's 104, I don't know, I've the figure from 102,000 discount on the value of the property. So they will deduct that from the purchase price and they'll deduct that from the value. And then what you get is what you have to buy it for. The only problem is in parts of London, house prices are so high. So example, I've seen cases where a house in somewhere like Hackney, they will say the property is 500,000 and then they will give you 100K, which means you have to get a mortgage for 400,000. You're a first-time buyer. You might not even be able to afford it. I know of a family who are kind of stuck in that kind of position. They've lived in their house for so many years, but unfortunately, because house prices have been going up in London, it's got to a point where even when they get the 100K discount, which is quite a lot, because of the value of that property, they are not able to afford. But all I'm saying is this: so if you are able to afford your right to buy, you should go for it. If you have the right to buy, you should go for it because you're getting a property. Another thing people need to understand with right to buy is this: the right to buy comes, to me, this is the way I look at it. It comes with two discounts. Actually, there's more than one discount. Most times when you're doing the right to buy, the council will value it at a certain price. But sometimes that value the council gives is actually lower than the market on the market. That if you want to sell that same property on the open market, it might actually be more than that. So you get a kind of, so the council say as a certain discount, and then on top of that, you then get the 100K or whatever discount. I know outside London it's much lower, it's not 100K, I think it's 70,000 or there, but I can't remember from top of my head. But so you get a discount. So that's why it's always best to do your right to buy. But I guess the challenge for a lot of people would be affordability.
Hmm.
So if you, let's say you have the right to buy, if you have children, if you are not able, if you have children who are working, then I think, and you can't afford to buy it on by yourself, excuse me, you can actually get other family members or household to join you on the application in order to get the right to buy. But all I'm trying to say is that if you have the chance, if you get the right to buy, you should always, 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 you know,
Mm.
because if you think about it, you don't want to be paying rent all your life. It's a very, very good opportunity. The council is selling the property for you at a discount, at a massive discount, you know. And on top of that, you know, you own your property. But the problem, I guess, with most people, especially in London, is people have the right to buy, but they cannot afford to buy their property because of house prices. So that's the only thing. But so that would be my own view on that.
Okay. Um, I know I've said final question, but I think
No,
we've got
go ahead. I
we've got a
said
few more.
we still have time for some more final questions.
Actually, more questions are coming up, so we might have to extend it if because this
No,
is the whole
okay.
point of doing
No,
this.
no, no, it's
Is
all right. Go ahead.
yeah,
Yeah.
is to answer
People can
people's.
ask as many final questions as possible.
Okay, I'll put my own final one towards the end. But there's a
Okay.
question. Okay, before I ask Sister Gladys's question,
Mm.
what is the maximum number of people that can apply together to buy a home?
That's a very good question, Sister Gladys. I don't know if it's four people. I
Oh,
think
okay.
some lenders, I think the lender, people think it generally is two. I've had this question before. I've had the question before. I think the average is normally about two or three. But I have to be honest. I think it might go up to four.
Okay.
But I think there are some lenders who might allow that from the top of my head because I remember I was asked this question. Oh, someone had this issue years ago or not too long ago. In general, it's normally two or two people, but I'm sure there might be scenarios. Don't I think there might be some lenders who might go more than two people on a mortgage, but generally it's two. But I think you might go up to four. But I can't give you an answer
Yeah.
certainly. I have to be
Uh,
honest with you. But it's a question I've come across before.
actually, that just popped in my head, and I was
Yeah.
thinking, because you said
Mm.
you talked about total income
Family
of
members, people
couple.
coming together. Yes,
Yeah, and I had
yes.
that. I needed to ask this
Maybe I can look into it and I can I
for the
can
next
I can address it in the next
next
session.
part.
Yeah.
Okay.
Any question I might because I'm always careful not to give
Oh,
wrong
thank you.
information. So
Thank
I,
you
I
very
can go
much.
and look into it. I'll
Okay,
check.
thank you.
Yeah.
Sister Gladys says, is there any other means you can use to buy? Oh, I think, oh, she said you've answered the question already. All
Mm,
right,
mm.
okay. All right. So like I said, my final question is what is your final word for those who are looking to buy a home? What would you advise them to do? Would you say what would you say start doing? Or if they're looking maybe in the next 1 year, or they have a target, they have a focus, or maybe they are still in school and they're thinking, oh, I want to start doing something about my vision of buying a home in the next 1 year or 2 years. What would you advise them to start doing?
The very first thing I'll ask them to do is start tapping it. I'm not sure if it's still around, but I think so. Help to buy ISA.
Okay.
There's that help to buy ISA. I'm not sure if it's still on. It might be. I'm not 100% sure. But there
Okay.
used to be what we call the help to buy ISA. This is where the government is like an ISA where you can save up. It's individual savings account. You can save up
Hmm.
to buy a house. So you put some money in, the government put some money in. It's to
Okay.
help. It's to encourage young people or people who have never bought their own property. So you look into that. Help to buy.
Hmm.
That's a good way to start saving towards a house. Whatever you saving, I think it's up there's some limits. I don't know if it's 4 grand. I'm sorry, I don't have all these figures here. But I think there's a
Yeah.
limit which you can put in. Yeah. Okay, so
In the
it's
government
ended.
website.
Ended. It's ended. Yeah. It's ended. Yeah,
Is
it's
it?
ended. Yeah, you can't open a new one then. That's why I thought. I said it's gone now. But
Oh
they used
yeah.
to make that.
Yeah.
So there used to be a help to buy ISA where you put some money in, the government puts some money in as well, and you can build a deposit. So it helps you to build up a deposit for the future to buy a house. Unfortunately, I
Sorry,
think it's now.
sorry. Did you say it has? It doesn't look like it has ended because I can
It
see.
says, it says, look, if you go down, scroll down, it says you can no longer open a help to buy ISA.
Yeah. Okay. I didn't see
So
that.
it talks about people who already have it. I
Yeah.
knew.
I was just looking
I
at
think it's
this.
closed. That's why I wasn't sure. When I started talking, I said I'm not sure if it's still around. But
Mm,
okay. But anyway, if you haven't got the help to buy ASA, try to start saving. You know,
okay.
I would think what I would advise as a money mentor, what I tell people is that one, try to start looking at your income and expenditure. Start trying to put something aside.
Mm,
There's what I call there's a strategy I call pay yourself first. Pay
mm,
yourself first means that most people decide with okay, I'll spend all my I'll have my income, I'll deduct, and then whatever is left is what I will save. That's not the way. What you do is that you decide, okay, I want to save. It's a strategy, but it works. You might say, okay, I want to start saving a certain amount every month towards my deposit. Maybe I want to save £200 a month. So let's say you're earning 1.5. This is just an example. So you just 200. So once your salary hits your account, 1,005, that £200, you just take it out and you just maybe have a standing order. It goes into another account. It just goes. And then whatever is left is what you live on. You manage on that.
mm.
That's
Okay.
discipline. That is one of the strategies we learned because so that way you start putting money aside. So when you start saving money, you have to start putting whatever it is. Don't be deterred that oh I need to save 20, 50,000. Or you start from somewhere. If it's £200, if it's £100, just start from somewhere because that amount can go towards something. Even if it's paying for your solicitors or paying for something. So start
Mm,
saving up. Affordability, what advice for people? So you start to save up. That's the first thing. Two, you need to also start doing some research in terms of where you want to live.
yeah.
These areas, what are house prices in the area? What in terms of that, what is affordable? You look at that. You look at the areas you want to live, how house price in that area. One other thing you can also do is speak to a mortgage. So once you can go speak to a mortgage broker. Sometimes the advice is free. They can say that okay, if you're looking to buy a certain property, this is how much you will need as deposit. This is how much mortgage you will need. This is how much income you need to earn. So by now you already know all these figures. It might take you 2 years, it might take you a year, it might take you 3 years, it might take longer, but at least you start doing all this research. So you
Mm,
know how much you need. So it gives an idea what you need to buy, where you need to buy, how much it's going to cost you. The other thing is your credit as well. Look
mm,
at your credit. Make sure you have a good credit. Make sure your credit is not messed up. Be careful how you manage your finances. You know, and thanks. That's my money mentor page. Um, yeah. So I used to run some of these web seminars. I've not done them for a couple of years now. But I used to have people where I bring them in financial awareness. We used to talk about money management and stuff like that. So yeah, so your credit, make sure your credit is good. Make sure you don't miss your month, you miss your any payments. Just look after your credit. Try to run your affairs really well because what you don't want is to save up and then when it's time for you to get a mortgage, you're not able to get a mortgage because you've missed your credit card payment or you haven't paid your mobile phone bill or something like that. You don't want that to mess you up in terms of your credit. Yeah, but so that is what I would advise. But so going back to what I said, you know, start putting some money aside. Whatever it is, just start putting anything aside. Use
mm.
pay it first mode. The strategy I call pay it yourself first.
Okay.
Start with that, and then do a research. Do some research on where you want to buy. What areas you want to buy a property. How much the price is in that area. Don't be deterred. If you see something and it says, I no, you can still get on the property ladder. Now, also, the biggest challenge for most people is affordability.
Mm,
I mentioned that during my last session, being able to afford, because you want to buy in London, especially, you see house prices are so much. But some people are so determined that they want to buy the house, they're ready to take certain steps. I'll give you an example in my own case. I remember the very first time I wanted to buy a property, I couldn't afford to buy in London. This is about 20 years ago, over 20 years ago. I couldn't afford to buy. So I had to move further out. I moved, believe it or not, I moved to Luton. And now I'll tell you one thing. From Luton to London, what I was paying for the travel fare was the same as my mortgage payment. But it was cheap, at the time. It's a low, this 20 over 20 years ago. So it was cheap there. But it could be that you might not be able to afford within the vicinity where you live. You might need to move a bit further out, to the outskirts where house prices are cheaper. Fine, it might have to cost you more money to travel, but at least you putting your foot on that ladder. It depends on how important or how passionate it is to you, how important it is to you to buy your first home. Some
Yeah.
people believe they want to stay within a certain vicinity and they'll prepare to rent. That's up to them. But some people are so determined that they want to buy and are prepared to move further out and to prepare to move further out to buy. So
Mm.
that is it. So that is one of the things. And also you can consider all the various options. During my first session, I mentioned all the various options to buy in a house. I mentioned help to buy. I
Mm.
mentioned shared ownership. I mentioned buying outright. So all these are different options you can based on your individual circumstances. So don't be deterred.
Mm.
Don't be deterred. But you need to decide, okay, I want to buy a house. Start doing your research. And then whatever information is out there, try to do your business and speak to a mortgage advisor, you know,
Okay.
and
Thank
then they'll be able to advise you a bit further.
you. Okay.
I see there's a question from
Yes. Sister Gladys is saying, are there disadvantages when about four people buy a house together?
now. I have to be
Mm.
honest, how I said I was going to answer that. I'm not sure, I'm going to qualify my response because obviously I have to check whether it's possible for people to buy a house together. I'm not 100% sure. It's
Mm.
possible. I'm not 100% sure. I have to be honest with you. But if it is possible, the major disadvantage I would think is when people fall out,
Mm.
you know, because if you're all buying, if you're all, having four people on a mortgage, is and it's people and life changes. Today,
Yeah.
people might say, I want to move away, and
Mm.
stuff like that. And then what means that if somebody wants to leave, what happens to one of them who wants to leave? Will you then have to sell the house to pay
Mm.
off one of that person? Or would you have to pay off that person? And that is the problem. Because what happens is when you're buying a property together as a group, you need to share the same kind of aspirations. You have to have a plan in place. That okay,
Mm.
we're buying it. So sometimes, okay, let's say we're buying this house together today. Even husband and wife, people split up, people go their
Yeah.
separate ways, or people life priorities changes. You have all that. So the question is that is those that I would think are the disadvantages because that means people have to have you have to have a heart to heart talk from the onset that okay, if we are going to be doing this, we have to do it for the next 5 years. You have to have some time scale because what you don't want is someone buy a house with you and then in a 6 months time they say, "Oh, I'm not interested anymore. I want to move to Manchester. I want to
Mm.
move to Liverpool or something like that." Fine, if they
Mm.
want to move, that's fine as long as you continue paying the mortgage. But if that person says, "I want my own share of that house," then it
Mm.
becomes tricky, isn't it?
Yeah. I
So that
think
is, yeah,
Yeah, sorry, just to add to that, I think maybe yes, we might say, oh, my best friend or my
yeah,
partner or my this, but
yeah,
having it legally binding, having something legal,
is it?
a
Yeah,
contract, draw up a contract so that if that happens, you know what to do, rather
mm,
than waiting till it happens.
yeah.
That's what I
But
would
but
say.
even there, Bumi, the problem is that even if you have a contract, because
Yeah,
look at it this way, even couples split up,
yeah,
and that's contract. Husband and wife buy property together. Tomorrow they split up, they have to sell. So it's
mm,
either so husband or wife or husband, one of them will have to pay the other person off, or they have to sell the property and people chill.
mm,
So all this is part of life. It's a life thing.
yeah,
You can't plan for every eventuality.
mm,
But this is just the disadvantages. It's just that, like, but as you said, Bumi, I think from the onset is make sure there's legal stuff as much as possible. Put all the legal protection in place. Also, you have to buy with do stuff with like-minded people. People that at least I know people's priority changes in life, but you need to decide what you really want and have some kind of I don't know. Maybe it might even be possible to have some agreements. I don't know whether it's possible. Just like you said, Bumi, saying something that okay,
Buying.
we will not be able to sell or do this within the next couple of years or something. Maybe some kind of agreement. Because what you don't want is to buy a house together and then one person decides, oh, I'm no longer interested, or
Mm,
or something. But most time it's family members who do stuff together. I
mm,
guess in this case it might be the parents and the child, or the mother or father with the children or something buying the house together.
yeah.
The question
Mm,
is that when the child then decides, I want to go off on my own, I want to do my own thing. So that is the main thing.
mm.
Yeah.
Okay.
Thank you, Sister
Mm,
Gladys. Thank you for that. You're welcome.
okay. Thank you so much. We spent so much time here, fruitful time. I really appreciate your precious time shared with us tonight. Thank you to all those online, those watching, those who will watch eventually. And yeah, I can't but just thank you. I know I can't thank you enough for sharing this precious time with us. So thank you, and thank you again, Mr. Abudu. So we're going to be having our next, that's like a wrap up session,
Yeah.
touching on some buzzwords, some words
Yeah.
that maybe people have not thought about. Maybe they go watch this again and they feel, oh, yeah, I should have asked that question. Please ask the questions and it would be answered for the next session, which is the final. Well, maybe it's the final session. We don't know, but
Yeah.
hopefully,
You know, our final thing keeps
I would,
changing, so you never know.
yeah, the finally keeps changing.
But
Yeah.
I'm happy.
So,
I love doing the. I have to be saying, for me, I like I said, like the last time, I would say big. I would say good for you. What you're doing, God bless you. You're doing what you're doing is great. Is and I'm always here. I love talking about these issues. I'm very passionate about home ownership, about our community, people owning their own house. Because, like I said to you, Bumi, once when we spoke, I said, even if your house doesn't go up in value, the fact that you in retirement you own your own house, you're not paying rent to anybody, it's a big thing. So I'm saying that's why I encourage people, because it's a no-brainer. When you're old, when you're elderly, sorry, not old, when you're when you get on in life, what you don't want is in your 60s or 70s be paying rent to anybody. It would be good for you to own your house. Even if the house price hasn't even gone up, let's say you just paid off your mortgage and you've owned your own property. And then if you pass away, you have something to give to your children. And your children are not starting from scratch. So that alone is something. So that means, and I'm always happy to come on anytime to share my ideas, to share my little knowledge I have. And yeah, so I enjoy being here and I'm looking forward to the next session. But thanks for having me on the show. Thank you.
thank you. Thank you very much. Thank you so much. And I'll say thank you very much for being here. We have come to the end of the show and we are hoping that you're going to write more comments, more questions. Go and dig them out. Dig them out. Somebody must have asked you a question in the past and you're like, I'm not sure about that. This is a time for you to ask. Next week, by His grace, we will be here again to talk about, to do a final finishing touches on some of the buzzwords we have been talking about in the past, about mortgages, right to buy, everything you can think of regarding buying your own home. So make sure you share, like, subscribe, and comment down below. So thank you very much for this, Mr. Abudu. I really
You're
appreciate
welcome.
you. Have a good night.
Thank you.